now. Okay, let's talk about the next company on our radar, and this is Sai Life Sciences. Earnings came through, earnings performance for the fourth quarter, healthy revenue growth and profit growth, but margins have contracted a little bit. There is, of course, the entire sort of, Trump back and forth, the executive order with regards to onshoring manufacturing to the US, etc. Sai Life, of course, is one of the largest CDMO players, and they are expected to be one of the prime beneficiaries if the CDMO space, as many investors believe, will pick up and, in terms of share gains, etc. Siva Chittor is Chief Financial Officer at Sai Life, and he's with us now to take some questions. Siva, good morning. Good to have you with us here. Thank you for your time. So let me just get that Trump question out of the way. With what we've seen so far, will it have any implication for Indian CDMO players at all?
So, none of us know what exactly will be the final outcome. With that as a preface, I think what this is leading to from our judgment is that there's a lot of uncertainty with respect to outsourcing into China. In our mind, the way this will play out is more the uncertainty, the more the need for diversification. We believe that there could be, a movement up and down here or there for a quarter, just depending on how things pan out. But we believe that the longer-term trend is towards diversification from China. And I believe that Sai Life Sciences, and not just Sai Life Sciences, but I think the industry will benefit from this uncertainty and the need to risk mitigate from a pharma outsourcing strategy.
Siva, how much of the work that you do happens onshore in the US?
So we have a biology lab that actually is a smaller portion of our business. This is primarily into exploratory biology. This is, our feed into our discovery business, which is performed very well, and that's what we do in the US. Manufacturing and larger scale, R&D contracts are delivered out of India from an optimal cost perspective.
So you do the discovery in the US and then you kind of manufacture here?
Yes, portions of discovery in the US and then do the large scale, both R&D and manufacturing out here.
So, Mr. Chittor, hi, good morning, Surabhi here. If I talk about your revenue overall, the revenue pie, what would the exposure to US be at this point?
So, very good question. The only problem with that model is, right, in a generic business, it's very easy for you to kind of provide what that number is year on year, because shipments that are made to a particular country are based on export filings that you do in a particular country and generally are not sellable in another country. Versus in the CDMO CRO business, you could be sending it to, let's say their corporate office, which is probably located in a different location, or you could be sending it to another CDMO, which is probably finishing up a formulation.
Okay, got it. Let me rephrase the question then, Mr. Chittor. Let me rephrase the question. How much of your order book comes in from American pharma companies?
I would say, 20% of our business would come in from there.
Okay.
And it changes year on year, so it's not a constant number, though this can change year on year.
Sure. No, got it. It just gives us a reference point to work with. Now, for this business, which is 20% of your overall pie right now, is there a risk, because if regulation keeps changing and now there is this executive order, tell us what you think of it, or tomorrow if there is a demand to sort of onshore more of the work, wouldn't this 20% of your order book be at risk?
Good question, Surabhi, but I think there are two things that are needed to run a CDMO or a CRO business. One is people, second is a lab or a manufacturing location. For somebody to come back and put a manufacturing location or an R&D location takes time. This is not an immediate thing. This is probably a 3, 4, 5 year period. The second thing is about number of people needed for R&D, the number of people needed for manufacturing. We believe that the Asian locations have a lot more ability to put people in demand. I think there are multiple things, right? On one hand, we are seeing a statement about bringing manufacturing in-house. On the other hand, we are also seeing statements that cost of the new drug should be reduced. So at this time, without going into what it means, we feel that there are contradictions to it, and we believe that this is not going to happen at least for a reasonable frame of time. And more importantly, their need, immigration is getting tighter. Their need to kind of have people to be able to do this business, in our opinion, is for a large scale that pharma today is looking for, I don't believe is there.
Okay, so you're not too perturbed at this point in time. Got that, and you've explained the reasons why. So I just wanted to get to the numbers that in this guidance. Guidance you've given is 15 to 20% CAGR growth over the next 3 to 5 years, and margin expansion from 24. You're hoping to take the margin to 30%. What will drive that? Will it be high-profile, avenues like GLP-1? Will it be some other specialty drugs or some other form of research? What will drive your margin to 30%?
So I think margin will get driven. So this is a projection we gave at the end of last quarter. We said our revenues will grow 15 to 20% CAGR over the next 3 to 5 years if you actually look at it. And then we've taken a target of 28 to 30% EBITDA in the next 3 years time frame. A large portion of this will come from operating leverage on account of expansion in the business. And that's really what we are seeing today. If you look at what we did last year, we were a little about 20%, and then we ended this year at 25%. So there's a jump from 20 to 25. So what we had told the street at that point in time is that we will take 2-3 years to get there. But you see the movement from 20 to 25, we've already done, more than halfway from where we were last time.
Siva, so on a CAGR basis, can we see 20% kind of revenue growth and 25% kind of EBITDA growth for the next few years?
So as I said, the business in the CDMO sector is a little lumpy. There could be a year where you're probably going lower, and there will be years where you're probably growing higher. That's why we gave you a CAGR over a 3 to 5 year period, and we are confident that we will get there.
Okay. Just talk to us a little bit about GLP-1, if you will. Are you a player in that segment?
Very difficult to comment because we are bound by a confidentiality agreement. But all I can tell you is any player in the CDMO segment, given the number of pharma customers who are working on the GLP side, not just the injectable, oral, there are multiple things. Other than those couple of drugs in the clinic, there is, in the commercial world, there is enough on the pipeline. I believe anybody who's working in the CDMO sector is probably touching some GLP-1 at this time.
But it's not.
I would not be able to specifically comment on whether Sai Life Sciences is part of it or not, just given our confidentiality restrictions.
No, I'm not asking you to name companies, but you can at least confirm whether you are. I mean, I don't think there's any problem with that, right? You can tell us if you are involved or not.
I think we would prefer not to comment on specific modalities that you're working on. That's why I'm saying that any company working in this space is probably working on something there.
Okay, all right. And I'm assuming this will be on the fill finish side, right? I mean, but of course, okay, we won't go into specifics, as you said. Maybe at some point when you can. Surabhi, you another one?
No, I think we've got the gist of it. Thank you very much for joining in, and I wish you all the best for the year ahead. Thanks for explaining the business dynamics to us. So still sounding fairly confident. They do have 20% exposure to the US, but they're saying that these things cannot be shifted overnight, even if there is a cry for more onshoring.
Surabhi, that 20% number, just to put it in context, I think the 20% is revenue coming from US companies.
It's the order book. I specifically said out of your order book, because he said that revenue, it depends on where we are shipping. It's booked at that point. So, it may not be the US, etc.
Yeah, my only small point is that if this were the US Trump actions, etc., has to impact, if it has to impact, I'm not saying it is, that number will be much greater than 20% because that depends on what you're selling into the US. Yeah. It can come from Roche, which is a European company. It can come from Novartis, which is a European company.
Absolutely.
So that 20% is a smaller number. The actual impact has to be the percentage of sales which you asked, but we didn't get the number.
We didn't get that number. Yeah. That's true. So let's see how this plays out. But for the time being, the company is saying that it's on track for further growth. Speaking of